Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am No FOMO Charts. Today is Friday, April 25, 2025. It's just about 7:30 p.m. Eastern Standard Time here in the USA. Welcome everyone. This is both a trading and investing stock charts, crypto charts YouTube channel. Let's begin with stock earnings releases upcoming this week. We have big tech continuing. Meta, Microsoft, Amazon, and Apple are reporting it's going to be a big week for tech. We also have multiple global companies such as Coca-Cola, General Motors, Pfizer, Starbucks, Visa, Robinhood, CVS, McDonald's, Airbnb, and Reddit, just to name a few companies. Economic data that's releasing advanced GDP and core PCE price index. Very important inflation data that the FOMC is watching closely. Unemployment claims, non-farm employment change, and unemployment rate as well. Current events and news, stock market earnings season continues. President Trump said he's expecting many countries to reach out and make a trade deal over the next month. China still needs to work out their trade deal and offer something substantial to lower tariffs. However, the baseline 10% tariffs that went into effect on April 5 are still in place for all affected imports into the USA. More recently, the USA Department of Transportation rolled out a new framework and regulations which will help reporting requirements for cars equipped with automated or driver assist systems, such as Tesla. Crypto, President Trump said top investors in Trump coin, the crypto token, will be invited to a private dinner on May 22nd. The crypto market reacted to that news. The token already pumped in price. SEC Crypto Task Force hosted its first major roundtable with new chair Paul Atkins of the SEC. They discussed the issue of custody for digital assets and acknowledged that the current framework of the crypto industry needs attention. Let's begin with stocks. SPY, S&P 500, still in the daily downtrend. However, we had a nice reversal. Remember, several weeks ago, maybe the beginning of this month, I said there's multiple scenarios that we need to change trend in the market. So one of them was V-shaped recovery. The second one was double bottom. The third scenario was uptrend reversal. And then what does that look like? We're having uptrend reversal right now. Some stocks did double bottom. We did not get the upside down head and shoulders, but still one of those three patterns came true and happened in real time, even with all the fear, uncertainty, doubt. So technical analysis still works, even in such a volatile environment. We're on a daily chart right now. You can see that higher low that we set above 512, 513 very nicely. Also, the trend line was recently broken to the upside just for the past 2 days. So multiple ways that somebody could have found this is if I'm only looking at a daily chart, if I actually Fibonacci from October 2023 to the top of February 2025, the price tapped the 618 level of $484 SPY perfectly. And we have multiple gap fills as resistant targets to the upside. We also have moving averages as resistant targets. So once we rejected down from the 20 SMA, which is about 544, pulled back for 3 days, this is a news play where the news changed. The sentiment changed after Easter weekend. We're hearing a little bit more positive news, information, and news quotes coming out of the White House and Trump administration. So we're starting to see that price rally. Also, we had some decent earnings. Google earnings and Tesla was half okay earnings, but they had some better guidance. So that's why we're rallying. Those three, the good news and the earnings as well, and this price pattern. So where are we going from here? We have resistance still to test to the upside on these EMAs. We have 556 and 561 are the upside resistance targets. I'm going to mark in blue for next time. The support level that we need to hold and not fall below to make sure we're not going to crash anymore is 539. So very simple. Just play 539 to 561 and it is risky to just buy now. Let's say if somebody's going to try to buy Monday or me, this is not financial advice, but trying to buy one of these lows, even though it's really emotional and uncertain, is technically it worked out okay. just remember that we still have a longer term death cross, so we're not out of the woods. We're not all clear yet. We need to have a very sustained uptrend to reverse that for the next 3 to 6 months. So we're not quite done yet. But the weekly did test its 100 EMA. And the other clue is if you're a swing trader, we could look back into the price now. On a 4-hour chart, back on April 7 to 9, we had a double bottom W in the price. So there's another price pattern that comes to play. In an hourly chart, there is actually a psychological type of upside down head and shoulders in this price from April 17 to 23. And then we got a golden cross on the hourly chart. 4 hours, not quite golden cross, but 15-minute and hourly. So that's why. If you know multi-time frame analysis, if you know chart patterns, if you're a swing trader investor, there was a way to decode the stock market. Nasdaq, we can see we had this higher low on the price as well, holding above 415, holding above 434, breaking out this week above 466. Still death cross, but right below the 50 EMA here at 474, resistance at 483. These are just really simple levels we can play. Google earnings did help to keep the market afloat. Thank goodness that we had some decent earnings. But again, the same setup happened. We fell into the 618, bounced off the 50% retrace and target the 382 Fibonacci. If we can have good earnings this upcoming week or next 2 weeks, we might even tap the 493 area, still having a death cross on the EMAs. Dow Jones ETFs, these are all similar. So I might skip some of these, but essentially we bounced off of the support level, 369, 381. Dow Jones a little bit more reserved though. We're getting stuck under that 20 EMA at $400. Next resistance target or the gap is 412 and 419. Russell 2000 did not rally as strong. We still have the death cross on all these indexes. However, the downtrend has been responding to the news. Risk on this past week or two, for about 1 or 2 weeks. It was 172 support, 181 support, resistance 195, 200, and 208 as well. VIX, just going to point out, volatility did come back down. So if we use the VIX, sometimes I just like to look at the price. Here, we know that when we have these crashes, last time we had a crash in August 2024, market came down a lot, S&P 500. To be exact, market came down approximately 9 to 10%. And on the VIX, we had a large gap up of like 120% and then crashed back down 62%. That happened again. We had a 200% increase on the VIX, and from that top, we're down 56%. So this is very normal what's happening in the VIX. Gold was too overbought. That's what I was saying last week, that it's getting really overextended. When we put the linear regression on, it poked out of there and then the news changed and then we had gap down. So just watch out for that. Sometimes that happens. The support on gold looking for 296 to hold and the resistance above 308. Silver had a nice oversold to reversion to the mean trade. And sometimes that strategy works really well. 11% on some assets. So very nice. And we're maintaining this trend. However, want to watch out, this doesn't turn into a weekly high or low. So this needs to break resistance if it's going to keep going. If not, it's going to pull back down to probably about 29.51. Copper had a very, very nice trade. Extreme. After this extreme panic sell, it held above $25 essentially, and then it had a 20% increase. Is almost 19%. It's a beautiful, beautiful trade. That's a reversion to the mean. This is a textbook reversion to the mean to keep in our memory for next time. Huge volume gap down, bounce back to the 20 EMA. Now, oil and gas are not responding so well. Natural gas, because in my opinion, is getting warmer, so the demand is going down, so the price is going down. There are other reasons for it, but that's just how I interpret this chart. So the next level could go down somewhere in the $14 ranges, and I'm watching for a price pattern. I'm not buying a falling knife. I need a price pattern. Double bottom, higher low, upside down head and shoulders, or consolidation to the side, or just the biggest MACD histogram momentum possible that I could find. Okay, so let's just do a little bit of upcoming stocks on earnings. So Apple's still in the death cross, but it bounced off that 618 level, the 172 down here, and they got oversold, and that hasn't happened for about 3 months. So that's good. The upside target, if we pull up the ATR, is about $9. Average true range. So next move can be about a 5%. If earnings are good, we might see this maybe go up to here 219. And if not, if earnings are bad, it can crash back down to $200. Just watch out for that. Microsoft as well, you can see all of these, yes, they have the death cross. So we're not completely safe from a potential market crash. It's not 100% safe right now. We're just having a tradable bottom relief rally. We had a higher low, so that's good. At least we stopped downtrending. But what needs to happen is after earnings, we need to see follow through on above average volume. If we don't have that, it's very susceptible for another dip down, and we can actually just consolidate. That's one potential outcome. Let's go to Amazon. Amazon and Meta had a little bit cleaner charts in terms of the bottom of the price. You can see this is almost a double bottom at 167. And it did get oversold. There's actually an upside down head and shoulders on the RSI. But on the 4-hour, you can see multiple levels of support. So now we're stuck between 166 and 190. Just playing those two levels very simply. And we could actually measure it as well. Plus or minus 13%. It might only go half that in the first part of the move. So maybe 6%. Upside target 202. And immediate downside target about 178. So we're watching those two on Amazon. Meta, the last tech one I want to show, Meta had a clearer double bottom on the charts. We can see whenever I see something like this, a W, higher low reversal, V-shaped recovery, which means intraday pattern happened in there somewhere, or upside down head and shoulders. Those are typically the 4 most popular common reversal signals for bottoms, tradable bottoms. And we're also having momentum and then MACD histogram momentum and RSI momentum as well, just using those two oscillators. So sometimes when the price goes below the EMA, it turns more into a momentum play or a risky oversold play. But that's what we need. Also bounce right off a pivot. So pivot points, just want to point it out. Sometimes it looks like nothing's happening on the chart until you just turn on one indicator and then everything makes sense all of a sudden. So watching out for that resistance point 564 on the resistance and support level 509. Let's move to crypto. Welcome everyone to the crypto segment of this video. We're going to go over the crypto indexes, some Bitcoin and altcoins, and then I'll do a stock trade review for education, and then that'll be the end of the video. If you like this video, go ahead and click subscribe, hit the like button, and share this video. Total, T-O-T-A-L, total, also highly correlated with the stock market crash. So it pays to at least check stock indexes with crypto as well, because April 7, 8, and 9 was the bottom tradable bounce. And was there a setup? Definitely there was. And then was this an upside down head and shoulders? Definitely it became that. Remember I said last week, we're holding above the 200, below the 200 EMA, right at a pivot, right at the 20 EMA. We had follow through and volume, here we go, we're going to the upside. And that measure move was about 10 to 12%, and exactly happened right now. First target hit. Second target, if it's really bullish, would go up to 3.24 trillion. If we pull back, it's probably just going to test the support of this 20 EMA like 2.81. So this is good. We finally broke out of the downtrending trend line that's been here for about 3 months. Very good. So it pays to just, instead of panicking when we're crashing, we want to make sure that we're drawing charts and not just looking at the price over here, not just flipping out, looking at news, because there's a lot of fear in the market. But you know what? Technical analysis still works and helps me calibrate my decisions and my mind. Very important. Very important. So now that we're outside this linear regression, I'm just watching out for we're not going to get a pullback down to 2.83. go to Bitcoin. Bitcoin USD is very, very similar to total chart, but I want to point out the setup that got us here. So we had a trendline resistance above, we had a trendline support below. Now, did we hit the exact perfect bottom of the trend line? No, that's why it might have been a little bit confusing. But there was MACD histogram and RSI bullish divergence for the past 30 to 40 days. It was there. Then the final pattern that really alerted me was it sort of looked like a double bottom in this pattern. And then we had the upside down head and shoulders consolidation for like 7 days straight. So that's why under the 200 EMA, but above the 1226 shorter term EMAs, it's testing that Bitcoin pivot point. Once we broke through that, then it was 1, 2, 3 to the upside green candles. So that's the setup to remember, is that upside down head and shoulders after a downtrend, that's real sometimes, right? We hit that target 12%. So the next levels we can go to, if we Fibonacci bottom to top, we hit that 618. That's why 618 95,000. So we're trying to pull back, see if we can hold 92,000, need to not go below 90,000 for us to try to consolidate and then get the next leg up to hopefully $100,000 Bitcoin. Ethereum, remember what I said last time, is it was just starting to get oversold. It was starting to get oversold. If it was from top to bottom, 65, 66% cheaper, and it's in a massive downtrend. We had a little bit of fundamental news coming out of new developments from Ethereum, but this trend line was broken, the most recent trend line. Finally, this is a symmetrical triangle flag going to the side, which was approximately 15% in size, and we went up almost 15%. So, like I said, technical analysis works. We had some news developments as well, but the setup was making a lower low on the price, higher high on the MACD. There was upside down and shoulders on RSI. Other indicators might have given you a clue. The pivot point, it's holding right above that. And then we had a stock market bounce as well. So next level up is $2,000 Ethereum. We need to hold 1,700 and then 1,600 Ethereum as well. XRP did not really finish that upside down head and shoulders. So last time, it's just more of an event. It doesn't always mean it's going to work, because usually crypto, you need some kind of news. So Solana, want to point out, my call on $100 618 Solana a couple of weeks ago, maybe it was about 3 or 4 weeks ago, was right in the money. So technical analysis definitely helps. $100, we bounced, we're at 150. It went up 50%. That's a lot. That's a lot. It was almost oversold. If we look at a 4-hour chart, what was the entry signal oversold? And then trend change. If I put this in a box, split it right down the middle, it was downtrending in March. Same thing with stock market. Then there's some kind of sudden uptrend reversal, and it hasn't stopped from there. And if we use EMAs, it's giving me a hint, golden cross on the 4-hour. That's a hint that it's going up. All right, let's look at Doge, and then maybe we'll look at Trump coin. Actually, let's look at Doge and Cardano. So Doge, just want to point out, the setup was upside down head and shoulders below that resistance. Next level up would be about 20 cents and 22 cents. If it pulls back, 17 and 16 cents as well. Cardano also had upside down and shoulders. I like this setup better because the death cross was a little bit more fresh, and there was an open MACD line. Higher low, higher high. And then there's good news about the creator of Cardano had some good news. So it didn't quite have such an explosive move, but almost. Now let's finish off with Trump USD coin. Now I want to point out to people that it looks like Trump coin, nothing is happening, right? Somebody might say, well, there's nothing happening on the charts. Well, it's not even going up. Actually, but if I look closer on a daily chart, there is one of my reversal patterns. What is it? Double bottom. Double bottom. And was it measurable? Yes, it was. 20% up. And then we actually went 100 to, we went 50% up. So there were several signals. Every time it gets oversold, we had a pop. And then this time we didn't, and it started consolidating. That's the key. Also, in terms of the trend line, it broke out of the trend line. See, these trend line breakouts are not random. Also on the RSI, we had RSI momentum on the purple, and then the MACD signal line was crossed up into the green zone. And we had good news as well. Fibonacci, if I bring that up, if I Fibonacci retracement the bottom, which was about almost $8 to the top, we hit the first target of the 0.88 retrace. So the next target up would be $16, next target up $20 if anyone's trying to still do this. But just watch out though, because it is consolidating. I wouldn't be surprised if it pulled back a little harder. It depends on the news as well. I have no affiliation with this coin at all. Okay, so let's end this video with some education. Now, I do not always day trade, but this month and this week in particular, because the news was better, we had a 3-day gap up. I decided to do some day trading, and I had a good week. But I want to show this setup on SPY, S&P 500, S&P 500 day trading example. So I'll show two scenarios. That's fine. I traded this day. I traded this day. I'll just do these 2 days. So April 22nd and 23rd, 2025. So what were the setups here? I want to make things clear to people because it looks like nothing is happening on this chart. So almost to maybe a beginner, it looks like can't make sense of this, right? On a 4-hour chart, this is the big April 7 dump. Rally, double bottom, the greatest day in stock market day trading history this year, pullback on tariffs. We had a 3-day gap down. And then once the news changed, I came back into the market to day trade. So I started drawing a trend line. I like to use extended trend lines because sometimes those trend lines last for multiple days, right? So we can see, start to set up the charts, right? This trend line lasted for almost 2 weeks. That's why I use extended. I really like extended. Highly recommend it. Then we could draw a horizontal one as well. So when I came into trade, did some of that longer term technical analysis like price of daily, 4-hour, 1 hour, and then I confirmed we're in a downtrend. But then once we got oversold here and hit this level, the 50%, the news changed and I said, there's a chance we're oversold that we can uptrend reversal. And that was true. So how I played this day was, did my pre-market prep. I know we're coming down, but then I starting to see higher highs, higher lows, trend change in the market. So what I did on this morning, April 26th morning, is wait. I waited just in case it dumps. It didn't dump, so we established the support level of 519. Waited, and then went long. Stop loss under, let it ride. Played this middle leg here, good profit. And then I can go both ways. So then I shorted this immediately after I closed mine. So this more advanced play. Made that, let it ride, right? I actually missed this part because I missed the morning star. I closed out. And then we had good news. This is like surprise news about China tariffs might make a negotiation. So we had like a 3, 4 candle, 5 candle gap up. And then I shorted this very top of the market because that's just part of one of my strategies using some indicators. And I actually closed about halfway, which is great. That's fine. I had just a wonderful day on that day. Now we can see that it continues. So if I'm in a day trader mode, I know I'm not going to capture the whole move and I'm just in and out. I'm in the trade and I'm out of the trade. So as it gapped up and we had some more good news over in the London session, I traded this next day. And this one is a very good example as well, because it looked like it was going to continue in the uptrend. But then what happened is a little bit of news and data, and then it topped. It topped at a level of support. That's why it's important to market first. Support at 545. So what happened is I just waited. I felt something was wrong. It's a little too volatile. The double top, and I said, okay, we're going to crash. And it crashed. And then what happened was using this data from this price data from yesterday, 22 to 23, is draw a trend line that matched somewhere over here, right? I was using pre-market data, and then it linked up to this spot right here on the charts. Let me erase this. So as the price crashed down, I remember it actually bounced off of EMA. So there's a support red line, and then I drew my trend line. It's also close enough to 3-2 Fibonacci. Not anywhere near a pivot point, not anywhere near a gap, not anywhere near Bollinger Band. But I just played it because there's 2 levels of support. And then this is me forming this, helping to form this candle in the market. Basically, there's a Morningstar pattern, right? So I played this pattern right from the bottom, right there, had a stop loss, then played it to about this red candle, so I had pretty good profit. And then what I noticed is, instead of rejoicing and getting all excited, I say, wait a second, there's a head and upside down head and shoulders. That's one of my patterns that I play with a clear level of support. This is like a perfect left and right shoulder. And let me draw it. Left shoulder, upside down head, right shoulder, clear neckline. Measured move would have been 0.5%. And in real life, didn't quite get there. So I played that long from this candle. Somebody tried to shake me out. I think some algorithm or like a pro trader tried to shake me out of this because he tried to kick me out of stop loss, but I got in earlier. And then I closed my trade once I saw these wicks here getting stuck at the 50 EMA. So I understood that we could have this bounce, but I'm like, oh, if it turns to lower high and we don't have follow through, because look at this volume is really low. We don't have follow through, I'm probably going to go short. So then after I closed it, shorted this, closed my long, shorted this, and then I closed about halfway, just a little bit of that trade. Had a good trade. I didn't really need to trade the rest of the day. Don't need to risk anything else. So then I just left the market. So those are the 2 trading days. There's a last one here, but this one is pretty straightforward. It's an uptrend. And also this day, for today, I was just playing this last part. And this is basically, some of this is me doing this price action right here. So pulling this down, going sideways and going down, and then I was out of the market. So done. So this week was great. But just remember, if the S&P 500 is going up, 1 to 3 green days or down 3 days, remember there's 500 stocks with the heavy weighted on the top 10 to 20 stocks in the SPY ETF. So that means if SPY is going up or SPY is going down, that probably means Magnificent 7 stocks are going up or they're going down, right? So it's just a correlation you have to remember. The biggest stocks in the stock market are inside of the S&P 500, Nasdaq 100, and the Dow Jones 30. Most of them in SPY. So it's really important for me. It sounds really easy like what I'm doing, but again, I highly recommend to people, trading is not easy. There could be a 90 to 95% losing rate. I am not, going to explain everything about my process, but what I can show is replay bar trading. I highly recommend bar replay. I highly recommend paper trading in the more real market hours to get real screen time. If you don't have the time, bar replay at night, you could go like 3 times, 5 times speed. Using the risk management tools or the position size tools for practicing long or short trades. I recommend long trades only for the most part. Manage my risk, manage my position sizing, just traded really well this week. But that was a decision that I made. I planned and prepared for it. I worked for it. I worked on it. It's different than just coming in and randomly doing trades. So in conclusion, it's all about the preparation. I'm not trying to show off right now. It's more about the preparation, the prep work of, am I going to day trade? Am I going to swing trade? Am I going to invest? Because we had to make all these sorts of decisions, right? We'll zoom out for a second. We had to make decisions as traders and investors. We don't even need indicators. When the price is doing this, crashing, what am I going to do? If it reverses like V-shaped recovery, what am I going to do? If it hits this resistance and goes down, what am I going to do? If it consolidates to the side for a couple of days, what am I doing? If it pulls back down, what am I doing? If the news changes, what am I going to do? How is it going to affect my position size and my trades? Or how's it going to affect some investment that maybe some people did in this zone, right? If I buy too early, what am I going to do? So there's all these sorts of questions that either somebody can plan and prepare for it, but also just doing a lot of replay trading helps me make those decisions like second nature and faster. Okay, everybody, thank you so much for watching. If you like this video, learn something, go ahead, click subscribe, hit the notification bell, like this video, tell your friends, and let's try to have a nice week. Remember, we still have earnings season. It still could be volatile. It's not over yet. Thank you, everyone, and see you in the next video.